Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of January the 23rd, 2017. Now to get started this week we're going to begin where we always do with the US dollar index. Now very choppy week this past week with the Trump inauguration. A lot of things going on here. Very difficult to say how this one is going to play out politically. We had Trump at the beginning of the week talking up the fact that the US dollar was overvalued. It sent the US dollar lower for several days as we continued to struggle against this critical VantagePoint 18-day predicted moving average. Now you can see we have our trend lines drawn in. They're coming in at about the 101.70 area, but the key VantagePoint level, the market just cannot get above this level here at 101.59 this past week. Now remember, the data coming out of the US is still fairly positive here, so the only thing that can really kill the US dollar rally is of course Trump himself by starting up a currency war with people like China, which is really not a good thing. So I think with the incoming data we're still looking at a potential rate hike in March, and it should be relatively positive for the US dollar. But again, there is so much going on surrounding this new presidency. It's going to be a very bumpy ride in 2017. That's basically all I can really say in that particular regard. Now, our indicators from VantagePoint are potentially warning of further US dollar weakness. We can see two things here. Predicted MACD breaking below the zero line, very important. And again, the predicted MACD coming up from oversold territory, but hitting that 40 level and then turning back to the downside, warning that we are probably going to see further US dollar weakness. But again, this is in my respectful opinion, is a self-inflicted wound here. And once again, I don't support any presidency that is going to start up a currency war here. You have to make do with the country's own merits based on the information that's coming in. CPI, GDP, unemployment, all of these things point to things are improving in the US economy. So the last thing we want to do is kill that rally, because that could have some other implications to it. Because if Trump kills the dollar rally, the very serious intermarket correlations that we have right now is to the S&P 500. Now, if the dollar rallies up further, then that will help bring those U.S. equities up. But if the dollar sells off, it very likely could have a very serious effect on those global equity markets. Now, when we look at this, once again, the case in point here that I always like to make is showing some of these direct intermarket correlations. So when we look at the US dollar and we bring this against its major intermarket correlations, and this is critical, I don't hear a lot of analysts talking about this, but it is absolutely critical. I talk about this with my own direct clients on a regular basis, and basically I advise them that we need to know what these intermarket correlation are when it comes into these to the forex market. But not just the forex market, the equity markets, commodities, and all of the above. So when we look at these correlations over the last 3 months, these are indisputable correlations here. When the S&P 500 goes higher, we can see in most cases the dollar goes higher. When the S&P sells off, you can see that the dollar immediately reacts to it. Now, once again, as the S&P 500 goes up, the dollar follows it. So in this particular case, and again, right in this area here, these are indisputable intermarket correlations here, guys, indisputable. So this intermarket correlation actually broke down this past week, but this had a lot more to do with comments from Trump than the actual intermarket correlation. So in most cases, these intermarket correlations will come back once that noise has passed. But understanding the direct intermarket correlations will lead to more successful trades in the medium to longer term. So when we look at that S&P 500, we look at the DAX 30, you can see that the DAX 30, when it goes higher, the dollar index goes higher. That means the euro is going lower. The Nikkei 225, very interesting this week that it looks like we potentially have a bottom in place here just above 18,500. If the Nikkei 225 turns back to the upside, then the dollar index will turn back to the upside, meaning indirectly US Japan will go higher, Euro US will go lower, US Swiss franc will go higher. That's how this works, guys. These intermarket correlations will trump any other indicator you're using. Elliott wave, Fibonacci, Gann theory, all of these wild and wacky indicators that people come up with. Not that sometimes they don't work. A lot of times in trending markets, anything works, guys. But looking at what's really driving the market is money moving from either into the equities, into the dollar, into the commodities. We look at oil. We've often heard that when oil goes down, the dollar index goes up. Well, in actual fact, when we look at these direct intermarket correlations, we can see that when oil goes higher, actually for the last 3 to 6 months, then the dollar index has actually been going higher also. So you can see that as the dollar index moved lower, it actually dragged oil down with it to some degree, and that's indisputable. So if we can get oil turning back to the upside, that could see equities go back up, but it would also indirectly help out the dollar index. Now, again, the only thing that can kill the dollar here is Trump. So this rhetoric, talking on Twitter, all of this stuff, it really needs to be toned down. The markets do not like it, and that includes me. The Federal Reserve is looking after a lot of these things. We've got there's a lot of things going on, but flip comments are completely unwelcome here, in my respectful opinion, without something to back it. So the last thing that we need is a global currency war. Nobody wants that because that's going to affect all of our other investments, our stocks, our commodities, futures. All of these things are going to be affected. So when we look at the S&P 500 here, guys, something is brewing. We are getting into a very tight wedge formation. So if the equities all of a sudden start to plummet lower, they break below this key vantage point level of 2259, that will likely also trigger a dollar sell-off right across the board. So when we look at the DAX is struggling, but it's holding right along this key vantage point 18-day predicted moving average. That's a positive for now for the dollar and a negative for the euro. So when we look at the Nikkei 225, we have to get above the key vantage point 18-day predicted moving average at 19,230. We're closing at 19,185. That's not good. So we need to get above this level and stay above this level in order for the dollar to recover. Same as oil here, guys. We've closed above the key vantage point 18-day predicted EMA. We've got solid trend line support coming in at 52. For next week, we need to hold above 52. That will give the dollar a chance to recover. But again, it's going to come down to how this presidency responds to some of the events that are taking place. You've got the March on Washington. I'm not sure if this is actually a march against Trump or a march against Washington. So when we look at this, there's a lot of factors that are going to play into what happens from here. So when I look at the oil prices, in most cases, oil is not overly strong at this time of year anyway. So if the dollar is going to come under a little bit of pressure, it's likely that oil will too. Now, gold again is being fueled by the man himself of the hour, Mr. Trump. So he's making a lot of people nervous with the Twitter feed, with the off the wall comments he's making about China's currency. He came right out and said he feels that the U.S. dollar is overvalued. Well, I don't agree. I think the U.S. dollar is grossly undervalued. And talking up or talking down a currency historically has never worked. So don't go down that road would be my advice to the new president. I'm sure he's not listening to me, but that is what I would suggest. So, when I look at gold, if gold starts breaking aggressively above 1220, 1215, and it starts aggressively moving higher, it's going to get help, and it's going to probably get it from Mr. Trump by some kind of comment. So I'm hoping that he will tone down his rhetoric. In my opinion, again, in my respectful opinion, gold is overvalued and the dollar is undervalued, but that could be argued either way. So that's what makes a market. Everybody has a different opinion, a different way of looking at things, and I respect all opinions. And I hope my opinions are respected too. So when we look at this, 1186.18 is the key vantage point, 18-day predicted moving average. That is a huge pivot area. Now, when I look at the VantagePoint indicators, I would say that VantagePoint agrees with what I had just said. We can see our medium term crossing over our long-term predicted difference to the downside, while the triple EMA cross is going to the upside. So this is a market that is very confused, and I think we all know who is causing some of this confusion. So in most cases, a signal like this from VantagePoint would lead to a market that basically the medium-term trend against the longer-term trend is weakening. So gold has definitely been having a decent year in 2017, and it did pretty good coming out of the end of 2016, but this warns that basically gold is losing its momentum. But then we get a comment like the US dollar is overvalued, gold immediately strengthens. So the indicators here, is gold overbought? Absolutely, it's overbought. Looking at the indicators here from VantagePoint, but an overbought signal is one of the worst possible things, or oversold signal, the worst signal you could ever trade off of, guys, because basically you're fighting momentum. So when the predicted RSI from VantagePoint broke above that all-important 60 level, we've had a significant rally here from the 1150 area up to the 1220, 1215, and that's reasonable. But the question is, does it have momentum? So if once Trump takes office, your guess is as good as mine as to what he's going to say, what he's going to do. So let's give it a chance, see what happens. We'll go from there. But right now, gold carries a slight bullish tone. Now, looking at our direct intermarket correlations with the euro currency, and again, I'll share here what I share with my own direct clients, that if gold is moving higher, the euro is moving higher. The intermarket correlation that you want to watch in your trading very closely, a couple of things: the VantagePoint 18-day predicted moving average at 105.89, and whether or not gold can continue to move higher. And the DAX, if the DAX 30 turns around or holds above that level that I talked about at the beginning of the presentation, the euro will sell off. So if the DAX moves lower, gold moves higher, the euro currency is definitely the currency you want to be buying here, guys. Now, our indicators from VantagePoint, they are not overbought. They are not even remotely overbought. And in fact, this rally could be just getting started as the predicted MACD finally breaks above that zero line, and our predicted RSI at 70.7. So for next week, if we hold above 105.89 and we break 107.10, then the euro currency, the pressure could be off the downside, at least in the near term. So again, this video is being done at approximately 2 p.m. on Sunday, ahead of the market. Nothing is lagging. All of the levels that I'm talking about, this critical 107.20, 107.15 area, the market hasn't even opened yet when this video is being produced. So keep that in mind. Know your levels ahead of the game. The neural index, the strength indicator, most of these indicators are pointing towards a higher euro, which indirectly points to a weaker Swiss franc. So euro US goes up, US Swiss franc goes down. The key vantage point level there, 101.25. When we look at our neural index, it is very mixed here, guys, but our predicted MACD is showing that we have some potential downside momentum building. When we look at these two indicators, the multiple failures on the 40 level here, we've broken below it, come back up, we're hugging against it, but then we're failing, and we're failing again right here. This does point towards a potential euro breakout. So it's going to need, in order for US Swiss franc to go lower, gold has to go higher. That's the play here, guys. So keep an eye on it. The equity markets, they have to go lower in order for US Swiss franc to go lower. If the equities turn around, gold softens a little bit, oil rises, US Swiss franc goes back to the upside, and there is still a better than 50% probability that that could happen. But once again, it's going to be up to our new president to see what direction he sends the US dollar in. Now, with Great Britain, US, everybody I think is warming up to the idea of Brexit. I've been a proponent that I think that Brexit is a reasonable play here. I don't think it's left-wing, right-wing issues here. I think that the UK is being muscled by the European Union. That's so I think good for them. If they want to go on their own, all the power to them. So we'll see how that one plays out. Right now, when we look at our key support level, 120, I talked about this area in last week's Forex Weekly Outlook. When we zoom in on this a bit and see it at a closer perspective here, we do have a fresh triple EMA cross from VantagePoint here taking place right around this 123.32. We can see our key pivot levels 123.32, 122.87, and 122.87. So 122.87 for next week, guys. As long as we hold above this area, we're going higher, but we have to break through 124 next week to take the pressure off the downside. This pair, the British pound, is going to have a very volatile year in 2017. You can see whenever we see bars like this that have basically a 300 to 400 pip range in one single day, currencies don't move like this, guys. They usually move 1% of their value per day, which on average is about anywhere from 60 to about 130 pips a day. That's what currencies move. So whenever we see this, we've got volatility, and it's usually being caused by some sort of outside noise. In this particular case, England started talking up the Brexit sooner. They're looking at Brexit for May. So we're going to see a lot of choppiness back and forth on this particular pair. But right now, VantagePoint indicators are saying we are going higher. The predicted MACD, the predicted RSI at 63.8. Momentum is building to the upside in conjunction with that key VantagePoint 8 or triple crossover, excuse me. So when we look at this area right here, we connect the dots and we follow it down to our predicted difference. We can see a signal here on our predicted MACD, and we follow it further to the break of the 60 line on the predicted RSI. All of this tells me that we're probably going higher, but we have no control over what governments are going to say, what politicians are going to say, so we have to take this into consideration. But right now, Great Britain, US, absolutely bullish, while above 122.87. Now, with the dollar yen here, I'm just going to redraw this in here so everybody can see. Let's take this off, and we're going to redraw our trend line in here so everybody can see where that critical level is. That's coming in. Our new trend line support is going to come in right about 113.40 area. Our key vantage point 18-day predicted moving average 115.21. We must get above this area, guys, and stay above this area. So once again, you're going to hear all kinds of different theories on political theories, theories based around maybe different types of indicators. Excuse me, maybe a Gann theory, maybe a Fibonacci, maybe an Elliott wave. All of these indicators, guys, will be trumped, no pun intended, will be trumped by an intermarket correlation. So in this particular case, the intermarket correlation is the global equity markets. If the global equity markets continue to stabilize and move higher, dollar yen will move higher, but we must get above 115.21. Very mixed signal here on the predicted RSI. We're above 40. We're still technically above the zero line, but it does carry a bearish tone while below 115.21. Longs absolutely favored above that, but I can't rule out that selling into the 115.21 area will also work. But what you're looking at to start the week, when the market opens, when this video is being done, the markets haven't even opened yet. So when we look at it, if we take a spike up on the equity markets, the dollar yen will follow it. But if the equity markets come under pressure on Monday and Tuesday of next week, then shorting dollar yen is absolutely a reasonable play. So watch those global indices very closely, particularly the Nikkei 225. Now, coming into the US CAD pair, good recovery here, but once again, this recovery was caused again by Trump. Now, what Trump said basically, Trump has made the Bank of Canada very, very nervous, and that's what they said in their statement this week. Now, again, my comments are not for or against Donald Trump. I'm simply telling you what has been said by the Bank of Canada, because Trump is talking about protectionism. So that is making the Bank of Canada nervous, and they have suggested they will cut rates in order to stimulate the Canadian economy. That immediately killed the Canadian dollar, and it reversed. We managed to close above this critical level of 132.63, but we have significant resistance in the 134 area, and further significant resistance around 136. Now, 134.23 is the yearly opening price for US CAD. US CAD is sold off immediately, strengthening. We've seen firmer oil prices, not strong oil prices, but firmer oil prices. So when I look at this here, guys, it's going to depend, once again, what does Trump say? What does he do? Hopefully this is not what it's going to be like for the entire year going forward in 2017, but I get a sick feeling in my stomach it is going to be this way. So for now, the Bank of Canada is nervous. They are looking at potentially cutting rates, which will again weaken the Canadian dollar. This indirectly points to weaker oil prices also. So for next week, our indicators are very mixed. We've got a crossover in our predicted MACD. We're only at 54.3 though on the predicted RSI, so we're not in a breakout phase here yet. Watch this level of 132.63 to begin the week. We're closing the week at 133.16. I anticipate a test of this 132.63. If it holds, longs are in play, but be very careful around 134.23, the yearly opening price for this currency. Okay? Now, as we come into our final two commodity currencies, Aussie US, we've got some congested resistance here, right around this 75.50, 75.60. We've also got a trend line here. The key VantagePoint level 74.18. Clearly, this has been a very bullish currency. But Aussie US, the intermarket correlation for the people watching this that aren't lucky enough to have VantagePoint, our medium-term crossing to the downside was already warning that the Aussie was weakening, but then we've got comments from Trump again. That strengthened gold. When gold goes higher, Aussie goes higher, New Zealand goes higher. That is what caused this. So whenever we get a big spike because of a comment from a central banker, a politician, it's not usually sustainable. So if gold does sell off, the dollar recovers on some stability, maybe Trump will start to mend some fences instead of constantly breaking them down, then just a little bit of a softer tone from this man would really go a long way for, I think, a lot of people, including the market. So what we're looking for here is more neutral rhetoric here, so we can get everybody working together again. But again, I'm not convinced that's going to happen. So if you're trading Aussie next week, the key VantagePoint level, it's going to come in at 74.18, and that's staggered support right now. Starting at 75.43, you can see that we've closed at 75.54, above all three of the key VantagePoint predicted moving averages, which is very bullish in its own right. So if these indicators can continue to advance, if we break through 76, 76.30, we are likely going back up to the 78 area off of this, again, swing high, and that's where the order flow guys will come back in looking to short this. So we could see considerable upside on the Aussie, but it is 110% dependent on the next move in gold. Gold goes down, Aussie US goes down. Gold advances higher, Aussie is going up with it. Same as New Zealand US, guys, and you can see we are sitting at a make or break point, 72.20. We've kissed this area basically 3 to 4 times this week, and the order flow guys, you basically are hammering it lower. But the question is, the line in the sand between the bulls and the bears is taking place, an epic battle to some degree at the 72.20, 72.30. If we break through this area, then we go higher, probably back up into the 74 area. So most traders, they will not buy high and they will not sell low. Guys, this is an easy trade if you know your levels that I'm pre-identifying you ahead of the market even opening this week. I'm pre-identifying these levels that if we can get a sustained break of 72.20, then along this high is your is your easiest trade you'll probably ever have, but it's going to need those gold prices moving higher. It's going to need equities going lower, the US dollar index going lower. That's what we need. But again, our indicators are to some degree mildly overbought here. That doesn't mean it can't go higher. Of the main indicators from VantagePoint, the predicted RSI is the most concerning to me. It is not advancing past this 80 level. Multiple failures, and again, multiple failures off of this trend line. So right now, as long as we hold above the key VantagePoint 18-day predicted EMA at 70.69, then New Zealand US will go higher as long as gold goes higher. New Zealand US, Aussie US, Euro US, potentially even Great Britain US will all go higher with it. So the intermarket correlations, guys, that's what you want to watch next week. Put your indicators aside. This could look like wave 1 of 2 of 3 of 5 of whatever. Don't get tangled up in this, guys. Look at your intermarket correlations. Money is moving. Big money is like locusts. They move from one field, they devastate that field, and then they move on to the next one. So follow real money. Real money always moves in intermarket correlations.